Welcome everybody. A warm welcome to those attending this evening's Pensions Committee meeting and also those watching live on Council's YouTube channel, Hillingdon, London. My name is Councillor Reeta Chamdal and I will be chairing this meeting. Details of the business to be considered today is shown on the agenda, copies of which are accessible online underneath the live broadcast. At the end of the public meeting, the committee will move to discuss any confidential matters. The live broadcast on YouTube will then be cut and any members of the public present within the room will be asked to leave. Housekeeping. We are not expecting a fire drill, so if the alarm goes off, please follow officers to fire exits out of the building to the designated meeting points. Also, polite reminder to please switch off any mobile devices to silent before the meeting starts. And just for online housekeeping, some important online housekeeping for those attending via Microsoft Teams. Please ensure any mobile phones around you are on silent. Please keep your microphone muted when not speaking, and only one person may speak at a time, and I, as chairman, will call those to speak. Okay, so before I would just like a quick introduction for our YouTube viewers so that they know who everybody is. Councillor Banerjee.
Councillor Kaushik Banerjee, Vice Chair.
Councillor Tony Bowles.
Councillor Stuart Mathers.
Marion George, the Independent Advisor.
Christopher Osborne, Head of Real Estate, London CID.
Roger Hackett, Chair of the Pensions Board.
Sonny Jeter from ISIO, the Investment Consultant to the Committee.
Jack Francis Kent, Principal Internal Auditor and Pension Board Member.
Richard Ellis, I'm the Corporate Director of Finance.
Tunde Adekoya, Pension Fund Accountant.
James Lake, Director of Pensions, Treasury and Statutory Accounts.
Anisha Teji, Democratic Services.
Virtual attendance, we have Andrew Singh and Andy Lowe.
Hi, good evening everyone.
Any apologies for absence?
No apologies.
Okay. All right. Any declarations of interest in matters coming before this meeting? That's none. Lovely. And the minutes of the meeting of the 5th of June 2024, Okay, so to confirm the items marked Part 1 will be considered in public and those marked Part 2, which are agenda items 10 to 12, will be held in private. Okay, so Part 1, Members, Public and Press, Administration Report, Tunde.
Thank you, Chair. On the Administration Report, it's business as usual. The KPIs are 100% like the previous month. One of the highlights of the quarter under review is the increase in the portal sign-up by members of the fund. So we've had an increase of about 4.5% from 30.95% at the inception of this collaboration with Hampshire in comparison to where we were with Surrey County Council. So it's now 44.52%, which is quite good. The other important thing is the backlog cases. It's now down to 524 from 4,158. So, and the bulk of the remainder is an impasse between the administrators and data plan, but that is being dealt with as we speak. In terms of cyber security, penetration testing carried out in July, there was one high vulnerability identified, and Hampshire have promised to have that fixed by December. In the meantime, the system is still protected by Hampshire County Council controls. The twice yearly testing now means fewer vulnerabilities are found, which is positive. Improvements have also been made in terms of user experience on the member portal. including email acknowledgements. So when members log on to the portal and process any form or anything, they get an acknowledgement that it's been received. So then major work has recently involved preparing the annual benefit statement. We now have we also have the employer benchmark data, which shows an employer's performance improvement. Results and actions will be discussed at the next pension board meeting, and it will be brought to committee at the next committee meeting in December as well. Thank you, Chair.
Thank you, Tunde. Any questions? Okay. Councillor Mathers.
Thank you. Hampshire continue to be true on form. Just two questions. One is, have we seen an increased communication uptake with employers? And the second one is, do we have any idea what the financial liability is following the McLeod decision on Hillingdon, and when might we find out?
The benchmarking data has seen an improvement, so employers are definitely communicating a lot more with the fund, and also they're communicating a lot more with their payroll providers, which is in a lot of the case with the academies and schools. So there's definitely been a change, and we went to a schools administration forum recently, and there was a lot more engagement, a lot more positive feedback from the accountancy representatives for the schools and academies. So that was also positive. So we're definitely seeing an improvement going forward as well. So yeah, and engagement with the major suppliers as well, or major payroll providers. So it's definitely, when you get to see the results, which we could distribute separately outside of committee, you'll see there's a lot less red now, and a lot more sort of ambers and greens. So we're definitely moving in the right direction. So we'll see what comes out of that, and also the actions from that benchmarking data will mean that we will be writing to them all again, and as we agreed in the administration strategy, that we will be fining the employers for where they're late on sending information through. So again, that should definitely make a difference. We had an example of that recently on a separate thing where the employer was struggling to get the information, then we levied the fine on them, and then they managed to find the information quite quickly. So the stick approach definitely seems to be, in the past has yielded results recently. So when we do the whole benchmark data, we're hoping that it really should be a wake-up call for those that are still in red, because it only goes to the people who are consistently in red who don't show an improvement in these fines. So definitely a positive. Sorry, and what was the second question?
McLeod, just the financial.
Well, the actuary has. We haven't got an exact figure on that. I mean, the actuary made an assumption as a whole fund value many years ago of £3 million, I think it was, on a £1.3 billion fund. So it wasn't a massive amount, but we haven't actually quantified that. We haven't got a specific figure yet, because they're still working through all the cases. There's new legislation that's come out that's changed the rules around McLeod. So they thought we were set up on McLeod to deliver it. Now they've changed it. So now there's a new implementation changing some of the rules around McLeod. So we're working towards those new rules as well now. So that was another curveball that was thrown in at the last minute. So I don't have an exact figure, but the actuary has assumed £3 million previously.
If I may, just for you, Chair, any idea what the timeline would be when we would get closer? I know it has to be done over the next year, is it? But any idea when we might get closer to knowing what the cost might be?
I'm not sure if we could ask Andy if he's got any feedback, or if not, then we can definitely go back and research that question and come back to the committee.
Upcoming valuation, so it'll be taken account again as part of the next valuation for March 25.
Roger.
Good afternoon, Andy. The Chair of the Pensions Board has been reading articles in the pensions press again, I'm afraid. So I've got a question about cyber security. There's been quite a lot of articles recently about AI and cyber security. I've not seen that mentioned specifically in your reports, but it seems to be a trend that's we're being alerted to that we should be asking our providers about. Is it something you can comment on, or perhaps something we can talk about more at Pensions Board?
Apologies, I didn't get the specific bit of cyber security that you referred to.
AI.
AI.
Yeah. There's these articles saying that this is going to be the next big threat. Are you ready for it? There's lots of that, as you know, in the pensions press.
Yeah, I mean, I can't comment from a technical point of view, if I'm honest. Clearly, we have layers and layers of security, cyber security, which includes things like prevention of bots, etc. And we have that regular penetration testing. So how AI would work into that space, I'm not 100% sure, if I'm honest. I can pick up with our IT in terms of they'll be doing general stuff on behalf of the county council in terms of the whole security layer around threats from AI. So I can pick it up as part of that discussion.
So perhaps at next Pensions Board we could have a chat there.
Yeah, by all means.
Thanks.
Any further questions? Okay, so we swiftly move on to agenda item 6, investment strategy and fund manager performance. Andy, you're welcome to leave now if you need to.
Okay, no, I shall see you next time. Thank you.
Yeah, thank you, Chair. Attached to the report is the new dashboard produced by officers in conjunction with the HLC. Hopefully, members will find it easier and it's more palatable on the eye. And there's a lot more granular information. So we'll be grateful if you can give us a feedback, either positive or otherwise, on how we could improve the report. It's been in the works for a while, and it has resulted in saving us a considerable amount of money because initially Easio were offered to produce this at a cost of about, well, as a considerable cost. So, so just in case the HCLG is watching, this is what an example of collaborative working and extracting value from our pool looks like. So in terms of the performance itself, headline funding level is now at 120%, assets up to 1.38 billion, and in the performance of the fund itself in the quarter under review is 2%, which is 0.2% behind the benchmark. The one-year performance is 12.5%, 0.5% ahead of its benchmark. 3- and 5-year returns at 3.6 and 4.0 annualized against 4.1 return target in the funding strategy statement. And it is recommended that committee note the funding and performance updates. Thank you, Chair.
Thank you, Tunde. Has this made your life easier as well? Because it's the first time I've seen the report, and although we would like it in colour, as Councillor Reeta has said, yes, for our use.
It is much easier to compare, and at least it's less text, which can be a bit daunting sometimes. And we feel this is the better version, but it's open to sort of improvement based on, I mean, it is for committee, so if there are things you want to see that are not quite apparent here, the feedback will be welcome. Then we'll collaborate with the CIV again and see what we can do to improve it.
Any questions? Councillor Banerjee.
Thank you, Chair. On a related topic, not relevant to this, I think we discussed having a glossary of terms previously. How's that coming along? I'm not sure if this is the right time to ask it, but it just jogged my memory. Like we talked about crib sheets, and explanations for like acronyms. Is that still in progress, or where's that got to?
Which is right at the back of the annual report. I will get that copied and circulated to all committee members and pensions board as quickly as possible. Thank you.
James.
I just wanted to add, though, you did create a handbook for pensions committee, and that was distributed to all the committees, so that which you should have received that, which is basically a very high level overview of all the fund, all the key bits, you know. So it's not a glossary of terms, but it's a handbook, which is an easy to digest sort of short report. So that you should have that, and that was sent to everybody. So just to keep an eye on that, or ask for it again if you're unable to find it. Then Tunde will get a copy of it.
Roger.
Just one immediate question. I can't see a breakdown by country or geographic area in terms of where we've got our investments. You know, as usual, you know, I'm looking to see how much is in the States and where the rest of it is. You know, that we're actually invested in line with the global stock market and the size of the global stock market. So I was just wondering why there was nothing about country.
Thank you, Roger. Because of the conciseness of this report, there are a lot of things left off it. But if you have a look at the performance report by Northern Trust, it's quite comprehensive, and it gives more detailed information in terms of geographical dispersion of the investment and other related information. I can send you a copy of that if you would like that.
Yeah, that would be really helpful.
Okay, thank you.
Councillor Mathers.
Thank you, Chair. Just a few things for my, sorry for the simplistic nature of it. So with some of the tables, so I'm just flicking through them in colour, which I should have done beforehand because it's so much easier. I don't fully understand the table that talks about the quarterly weight change with asset allocation. I understand there's been very little movement in one sense, but I don't understand the figures where it says +5, +8, +9, etc., and what that's referring to. I assume it's just the total allocation percentage. And I wonder if there's a way of merging some of these tables. I will put some things into email. So that is on page, for reference, that is on page 15. Yes, yeah, thank you. So I assume there must be a way of merging in potentially the quarterly into some of the asset allocation versus target, or merging in the actual allocation on page 14 at the bottom with the target allocation, so that the table's a little bit fuller around allocation, to give a bit more of an overview, so we're not flicking between the two. But I do appreciate these things take time to construct, but it is a lot clearer, and I do thank you for the work. It genuinely has made life a lot better in terms of understanding. My only other ask would be, so the commentary on page 13 is very helpful with the global bit. There are a few phrases I will email outside of this meeting and go, I've forgotten what this means, or can you remind, if it's not in the handbook. But what it doesn't do, and I know we have a part 2 on this, but just one or two summary lines when it comes to where there's been kind of just within the commentary, just a highlight of this is an area or an asset class that is underperforming. In summary, we've got some in the allocation asset appendix, which shows where they've not had a positive contribution, but it doesn't necessarily tie in with the commentary as to why. I'm happy to write some specifics down and then be told, no, it's right there in front of your eyes, Councillor Mathers, outside of this meeting. But as we get into this new format, and the commentary does tell a nice picture, but just making sure it relates to our performance without giving away anything that we can't disclose financially. But this is much clearer, and I appreciate all the time that's been put in by LSIV and Hillingdon officers. Thank you.
Marion.
I was just going to refer back. I don't know whether you circulate the to Roger's question. I don't know whether you circulate the CIV's report, do you? Because I think that would have some of that underlying detail, but it's a very long report.
The CIV report is on the shared drive for committee members, but Roger doesn't have access to that. So, again, that's another report I could send to Roger.
That's absolutely fine. Just the overall figures. I'm just looking to see how far our, whether or not we've moved our assets so they're in line with the global stock market, and because for many years UK pensions were focused on the UK market, and those days have long gone by.
Marion, would you like a copy as well? You've got the answer. Lovely. Welcome to Sylvia from London Civ. That's fine, it's okay. Right, any further questions on this particular item? Councillor Bells?
Thank you. Just a brief one, really, and perhaps it might be a one-word answer or whatever. And thanks for this, but it would be nice to see it in colour. I must admit, it would help. Are there any red flags?
Not to the best of our knowledge. I think these were produced in colour, but it's printed in black and white so we'll talk to Anisha and see if we can do it colour. Or we could circulate the original information by email, which will be in colour.
What I meant was, are there any red flags that we should be aware of that jump out at you at this?
Any things you want to highlight?
Well, in the third point, I think the fund underperformed by 0.2% against its benchmark. That's about the only red flag.
James?
I just wanted to say there's also, we note the performance of the LCIV Global Equity Paris Aligned Fund, which also is continuing to underperform. But maybe Sylvia can provide a bit more information on what they're doing with, which is Bailey Gifford, that fund, which continues to underperform. We know that Ruffer has turned around to performance in the last quarter, which is outside of this reporting period, but I don't know what's happened with Bailey Gifford and, in terms of their continued underperformance. So again, that may be something that we could ask Sylvia while she's here.
Sylvia?
Yeah, thank you. I'm happy to comment. I think that if you look at the second quarter performance, which is what you see in this report for the LCIV Global Alpha Growth Paris Aligned Fund, that's the fund that is managed by Bailey Gifford. What you see is that during that period, markets have been experiencing a lot of concentration. So most of the performance being driven by a very few number of stocks, and they are primarily like the information technology stocks in the U.S. There's like 7 names that have been like nicknamed in the market as the Magnificent Seven, and what you see is that there's been a period that is very difficult for active equity managers to outperform the market, because they would not necessarily hold the same type of weight that the market is holding in these type of stocks. So just to give an illustration of what I'm trying to explain is, if you look at the U.S. market that is represented by the S&P 500 index, these technological stocks nowadays, they represent almost 30% of the index. And if you look at the MSCI World, which is the index used in the Global Alpha Growth fund, or MSCI All Country World, almost 40% of that weight is U.S. market. So if you have a rally of very few names and the other alternative names are not following through, it's very difficult for active managers to outperform. And I think this has been the driver of the underperformance of that fund over the quarter. Having said that, we are observing now that in July, August, there has been some shifts in equity markets, and we see that some of these tech stocks are not returning as strongly as they were before, and that means other stocks within the market are being able to participate in the upside, and the distribution of the returns is less concentrated. One other thing is there is one stock called NVIDIA. You probably heard a lot, that is making a lot of profit on the back of the artificial intelligence. This stock is not one of the stocks that Baillie Gifford started to invest right from the beginning. So that also contributed for them not to be outperforming more their benchmark, because they came in much later and they didn't benefit from the profits that this company had in their share price right from the beginning. I'll stop there and see if you have any other questions.
No, thank you.
I have a quick question, Councillor Mathers, before I come to you. So I think we've asked this question again previously, Sylvia. How long do we keep monitoring?
I think we are monitoring forever. I think Marion, as your advisor, will always recommend that you monitor your investments always. But I guess what you are asking me is that at what point we would replace that manager, right? We think that Baillie Gifford, despite the fact that they have been underperforming, they have addressed a lot of the concerns we had when they first lagged performance compared to the peer group, compared to other growth managers. They have improved. So according to our investment team who oversees and monitor the manager, they've seen a lot of signs where they have addressed some issues that they had in better calibrating the risk of the overall portfolio, and they are a lot more confident that Baillie Gifford will be able to recover the losses that they made right after the pandemic. So 2022, 2023 has been very difficult years for Baillie Gifford, but we think that they could turn around. Having said that, we are still expecting the equity markets to be in a period of a lot of volatility. And, even with the U.S. elections and other things, there are other factors that it means it's not going to be like a linear improvement going from now. This is what we expect.
We'll keep a close eye on it and see where we are. Councillor Mathers.
Sorry, Chair, I do have a few more questions. So just looking at the asset allocation appendix, which is really useful. Firstly, it would be useful to get, we are underweight still on infrastructure, and my assumption is that's because of drawdown. When are we going to get to the point when we start to see more infrastructure projects, investments coming online, so that we can kind of get our weighting up? And once that's answered, I can go, if I may, Chair, for you, go on to another question around another asset class.
I can take that. So your commitment to the LCIV Infrastructure Fund is almost fully drawn down. So this fund started in October 2019. So the investment period to draw down the capital has already completed. So we see like you almost like 90% already draw down, and all the funds that you committed have been committed to funds. So we think that if your overall allocation to infrastructure is below your target, maybe you would look to review that on the back of your triennial evaluation in March 2025, and think about if you want to make additional commitments, because also your Maguire investments there on the infrastructure, they just paying back, and as they pay back, your exposure to that investment is going to decrease. Of course, we at the London CIV, we do offer the LCIV Infrastructure Fund as well as the Renewable Infrastructure Fund, and I think we spoke at length in a previous meeting about the opportunities that you have with these funds. And Andrew is on the screen, but I will refer to him because he also advised other partner funds at the London CIV who did a full exercise to compare and contrast the funds that we offer and to see where are the opportunities. So if you are underweight your target, I don't think it is because it hasn't been drawn, but it's more about topping up and making future commitments to this asset class.
So on that, if I may just follow up with Jameson, so is that because we're distributing funds from Macquarie, or are we reinvesting those funds back in order to gain weight?
We've got 4 infrastructure funds with Macquarie, and each of those are almost coming to the end of their life now. So they're just, with infrastructure, it's not sort of reinvested, it's like a closed-ended, so they just pay back at the end of the investment period. So all those funds are beginning to pay back now. So although there is still a little bit more to go into LCIV, we do need to sort of look at a new allocation and increasing that commitment, I guess, to infrastructure. So that'll be something I guess we'll pick up as we move into the sort of valuation period again, and we'll look at the investment strategy again. But we could do something earlier, and obviously thank you to Sylvia, because if Izzy have already done all the work, we don't need to pay again for the fees for all that analysis. So hopefully that'll be a quick win for us. But yeah, it is something we do need to look at, because those funds have paid back now, so now we need to reallocate an additional 3% to infrastructure.
And sorry, do we have the funds to do that? Or do we have the liquidity in our assets to be able to invest in infrastructure now?
Again, we would need to look at it, but there is an allocation to that, which was coming from RUFA, which then we realigned, so we'd have to work through it. But yes, we'd have to check the cash flows and where money is available. Like, for example, with 2% overweight property, and again, it's timing as well. So there is money there, but some of it's in property, which means then we have to wait 2 years for that money to become available to then get to our target allocation in property to then be invested in infrastructure. So some of it's around liquidity of some of the funds we want to reduce as well.
So I think at the time of the last strategy review, James is right that the allocation didn't look like it needed to be topped up, so that was maybe 18 months or so ago. Since then, the LCIV fund's drawn a lot more capital, so as Sylvia said, nearly fully invested. But we've also seen the overall asset value of the fund go up, so the funding update you saw earlier shows the asset values have gone up by around 200 million since the time we did the asset strategy review. So that's where the underweight has come from. But exactly right, to keep towards our target, we need to top up by an amount, so we can look at the LCIV products to do that. And the position will keep getting underweight as those Macquarie funds continue to pay back.
So this is a question for Marion and Andrew, because in the past, from my experience, I think an overcommitment strategy would help in sort of rebalancing the underweight position, which is what we employed with private equity at the inception about 15 years ago. Will that be an option?
Sorry, I'll just ask with the explanation. I didn't quite understand what the question was.
So,
can you lay the sense for me?
all right. So the strategy dictates we have 8%. So with an overcommitment strategy, right, you go over and above the 8%, but by the time it's time to pay the extra, let's say we go to 10%, by the time it's time to pay the extra 2%, you would have got paybacks, which will sort of fund those. So you stay within the 8%, at all times, rather than wait for the valuation, wait for it to drop, and then revisit the position of trying to put more money in. So we had that with private equity at the inception, and it worked very well. I'm just asking, is that an option with infrastructure, Andrew or Marius?
Yeah, maybe I can probably comment. So yeah, typically that's quite a common strategy. So the reason you would do that is that you would look at so you have Macquarie paying back, you have LSIV who are nearly drawn, and you can figure out what the net position will be over time. But then, if you were to make a new commitment tomorrow, it could take 2 or 3 years for that to be drawn into the new fund. And over that time, as we've seen has happened since the time of the last strategy, the assets increase in size, so actually you end up underweight even when you're fully drawn. So that's exactly why you would overcommit. So we typically advise to do that, but it's a balance between the risk of, because once you've committed, you're committed and legally bound to come up with the cash. So you don't know what the asset value could do in the meantime. So it's a balance. You wouldn't want to overcommit too much, but equally, often overcommitting by a small amount is helpful in terms of managing that balance of the strategy.
Marion.
I was just going to say, I think maybe we should take that away as an action and come back to the committee in the future.
Councillor Mathers.
Sorry, Joe. On to my second point. Private equity. So I wondered if we can get just a little bit more explanation on this. So it's reducing, it's not allocated. We're exiting, I'm assuming, with quite a few bits. So it'd just be useful to get a bit more context. And do these numbers tell a picture of underperformance, or do these numbers tell a picture of it's not for us?
Private equity, we invested in private equity a long time ago, and over the period it's performed very well for us. It's done extremely well as an asset class. But it's one of these closed-end funds, so you invest your money and then you get your money back after a certain period of time. And bearing in mind, I can't remember, 15 years ago I think we started private equity, maybe even longer. That's all being paid back now, so we've got hardly any money in private equity. And at the last investment review or strategy review, we agreed that there should be a zero allocation to private equity because at the time it wasn't an asset class that was favoured by the advisors, and they said there's better value elsewhere doing other things in terms of a risk-adjusted return. So it was very good. It's done very, but we don't have any allocation now, and there's no allocation in the strategy for it. Whether that could be looked at the triennial valuation is another thing.
Councillor Mathers.
So just on performance monitoring then, should we assume then that it's just going to hold its value apart from the contributions it makes, or it will continue to grow the weight of it as well as contributing?
It won't grow because there's hardly anything left in it. It will shrink to zero.
Yeah, sorry. So what I'm saying, so there will be no value change on private equity. It will just return. There'll be no up or down of it. It will just return over time with the money that we're expecting to make as per the agreement.
Private equity is
like a loan, effectively.
No, it's an investment which is there's the way they price it. It's called a level 3 investment, which means there's not a lot of certainty around it. There's no market transactions going on regularly, so it's all derived from models on future cash flows. So there's a lot of risk around the value of what's left in our fund. So it could go up or it could go down. I mean, I think when we were at the CIV conference, they said arguably these are quite prudent, these valuations. So when you do actually finally sell out of your position, it's a better number than what you're reporting under the methodology. Does that answer your question?
It does. I just want to make sure that we're still keeping an eye on it and the valuation isn't off piece or the figures aren't telling us a different story. It's a small amount, 75 million.
Marion.
Again, I think this is something we should look at as part of the strategy review. The actuarial valuation's next March, and so I would propose that we try and do some strategy a bit sooner maybe than last time, and look at this here, because it's a long-term asset class with quite a lot of risks and as well as rewards. And also, possibly by then, hopefully the CIV will have launched a vehicle which we could look at, because one of the issues is that the CIV doesn't have a private equity vehicle, and so if you want to increase your allocation, you have to go away from the CIV at the moment, which I think generally the committee is supportive of the CIV and ideally wouldn't want to do. So.
Sylvia.
If I may, we do have plans to launch a private equity fund in 2025. One of the sessions we had during our annual conference was to have a workshop and talk to those partner funds who attended and understand if there was an appetite. But we have already identified a handful of clients who have exposure to private equity today and would like to top up or would like to increase their allocations. Of course, we are here catering for 32 different investment beliefs, so there's also a significant other number of partner funds who are not interested in investing in private equity. So there's both sides, but because we see demand and we can create something that can deliver on the scale to help everyone, it's something that we will be launching in 2025. Our investment team already had discovery days with private equity managers, have been doing research and looking at the private equity landscape and the market and what are the opportunities out there. But it will come, but these things take time. Takes about 6 to 9 months to actually really launch a fund and be ready for investors to commit. So, you're going to go through your valuation period next year, but we hope that by the end of 2025, we'll have a vehicle available for investors to choose if they wish to do so.
Lovely, thank you, Sylvia. And I think you're quite right, Marion. It's something that we need to be looking at, possibly 2025 when we do look at our evaluation again. Happy with that, guys? Any further questions? No. So we are now moving on to agenda item 7.
Thank you, Chair. Responsible investment update. Within this report are examples of the ESG activities of our managers and the voting numbers, plus information relating to our affiliation, the performances of LAPFF, of which we are a member. So this is quite, it's just an informatory paper, and we recommend that committee note the fund managers' ESG activities and compliance efforts, and note the LCIF and the LAPFF activities in terms of ESG and RI. Thank you, Chair.
If in agreement, I think we note them. Councillor Matters, as our lab representative, any questions or comments?
If I just may apologise, there probably would be a little bit more about LAFT in here if I wasn't ill during their before their conference. So apologies that that's not in there. But yeah, I think it's really useful to see the examples, and I think this is something we fed back before. So around the certain companies identified in the report where there's been engagement escalation and some positive and some almost movement with others, but it shows examples. So I just encourage continues in the reports to have the examples and the storytelling of, because we can't list the thousands of engagements and the impacts beyond the numbers, but we can tell a few stories, which I think the officers have done really well from the reports they've received.
I agree, because we've got some headline companies there that are a bit of an eye-opener, aren't they, which you wouldn't think of, so it's useful for us all round. No? On to agenda item 8. James.
Thank you, Chair. As promised at the last committee meeting, I've moved all of our risks, which were previously on a spreadsheet, onto the new risk management system of the Council, JCAD. The system allows us to keep a record of the risks, but remove them from active management, so they're not all listed every single quarter. This is where they're either being tolerated or form part of just general business as usual work. With this in mind, I've retired 11 of the previously listed risks, and we now have 3 risks which remain as being actively monitored. This paper asks committee to note the risk register and consider my proposals in terms of retiring the risks identified. Thank you, Chair.
Just a quick observation, like James, on this. Does this come in an Excel format? Because I think this is printed and I'm trying to just align some of the pages. So does it come in like an Excel format?
It is an Excel format, but I guess once it was produced for committee papers, it's quite a big document, so then it crunches in and it sort of looks. But so we can get those emails separately, just so they're sort of manageable. But yeah, they do go across quite a few columns. Yes, so it goes quite a lot of like, okay, which column I add on here? Do I have any questions on this? I did have a question on Pen 12, failure of the fund's governance to comply with statutory requirements. Could you just elaborate on that for me, James, please? We primarily introduced this risk because of the new General Code of Practice, which was introduced by the pensions regulator. So this is a whole new set of rules which we have to comply with. So with a new set of rules, we wanted to sort of make sure we're completely on top of this. So we've listed it as a risk. And through the process, we had to have done a review of our situation by September, which is done. And we used a tool. The committee may remember we used Aon. The Aon tool is where you can put the information in, and then it produces a report on where you're compliant and where you're not compliant. This is there are 3 different versions. This is the sort of summary version. Tundi's got the version which has got all the information in it, but you don't really want half a tree's worth of paper with that being sort of shown. So we've done the initial gap analysis. Marion is doing a peer review and working with Tundi just to sort of look at that and sort of come up with her comments. And then once that's done, we're going to look at all the gaps, obviously, and then start rectifying where there are things like policies that are missing. So, and that needs to be done by September 2025. So we've got roughly a year to then sort of address all those gaps. But because it's a new set of rules, there's 140 odd pages of requirements. So that's a massive code of practice. So we just thought we'd list it as a risk because it's something that we really do need to work on over the next year to make sure we're compliant. And we're working with the Pensions Board as well. We'll be reporting regularly to the Pensions Board because obviously it's very much high on the Pensions Board agenda as well. So that's something that features heavily with the Pensions Board, the progress on that.
Good, thank you, James. I think you're quite right. It does make sense to have it as an action point. Otherwise, it just gets left behind somewhere along the line with the amount of work that you do have to do. Councillor Mathers.
Thank you, Chair. I wonder if the committee would consider, and with officers' guidance, maybe not retiring Pen 9 and Pen 10. Within Part 2 and also within this section, we've spoken about liquidity, both in terms of asset management and in terms of, well, I assume we would talk about members' dealings. And I think there are still a number of things that the committee needs to consider around movements of things and how, in going towards our new strategy following the evaluation next year. I wonder if we could keep those live for a bit longer while we just continue to monitor and understand our kind of liquidity, particularly around asset management, but also in terms of member dealings in context of a later item in Part 2.
Yep, these are my suggestions, so more than happy to add them back on. But yeah, I would say that we do manage these risks as part of day-to-day business, especially with member dealings. We're obviously, the key risk is making sure we've got money in the fund to pay pensions, which obviously we do every time, but we just have to manage that cash flow. So it's just part of managing your own bank account, really. So it's what we do on, it's Tundi's day job. So I would say it is business as usual, but if committee want us to sort of monitor it, then we can sort of add it back on and sort of add that on to the active risk. So I'm more than happy to do that.
Committee, would you like to add it on? Yep, show of hands. Are we all in favour to add it on?
Oh, sorry. I've got nothing to agree.
Agree to add it on. Okay, so that's agreed. We'll just add it on and then we'll review it again in December's meeting. And then following the Part 2 discussions as well. Yeah. Right, so moving on to, I've forgotten where we were now. With governance. No, 9, governance. Sorry.
Thank you, Chair. Here we have the forward plan to review and suggestions. In addition, there is the latest information in terms of committee CPD progress. I'm happy to say Councillor Chamdal is leading the way with 28 hours of completed assessments and training. As a reminder to committee, you are committed to 14 hours annually of training. So, just to note, there are 2 policies which require triennial refresh, the communication and the reporting breaches policies. These are only cosmetic changes plus an alignment with the new government code of practice. So 2 marked up copies have been attached for review. Lastly, as committee will be aware, the new government code of practice was introduced earlier this year with a requirement that a gap analysis should be undertaken. So this was undertaken by myself in September and peer reviewed by Marian and James, so as to ascertain the level of compliance required by September 2025. So we have attached a dashboard of the initial analysis, and it is still undergoing the peer review again. So once this is done, we'll walk through the gaps and implement fixes where required. Committee should note that the pension board are actively engaging with officers in terms of complying with the new code. There are 6 recommendations with this item. So, 1, to note the dates for the pension committee meetings. 2, make suggestions for the future agenda items, working practices and reviews. 3, note committees' continuous professional development updates. Agree updated commission's communications policy. Agree updated reporting breaches policy. And note the GCOP update. Thank you, Chair.
Any questions? No. And are we in agreement with the recommendations? I think agreed. Agreed. Lovely. Sorry, Roger.
Now you've agreed the recommendations. Could I just thank Tunde for the enormous amount of work that he's put into this. This is, yes, Pensions Board has been actively pursuing this issue, and you've put in an incredible amount of work here. Thank you very much indeed. I think it's very interesting to see how close we are to compliance in some cases. It turned out to be correct that we did expect that our current full level of compliance would get us quite a long way towards meeting the new requirements, but nevertheless the amount of work you put into this, and also the amount of work that will still need to be over the next year to get us finally over the hurdle of being fully compliant. We need to make sure, both committee and us, that you're properly resourced for that. I know Marian's helping you, but getting that final bit is still an awful lot of work, and there's so many other things going on. Pensions Board is always worried about the workload that's put on officers. And we would welcome you buying in whatever expertise you need to help you get there. I really don't want to underestimate what a heavy workload this is, and thank you very much.
Thank you for that, Roger. No, and totally agree. I think we've got a risk item anyway for resourcing within the team, and that's ongoing as well. But looking at a glance at where we are compliant, we're not that far off though, are we? So well done, team.
Chair, can I make one other comment? I'm very pleased to see on the training plan that equality, diversity and inclusion is down there. Could I put in a plea that perhaps this would be a good opportunity for a joint training session of both Pensions Committee and Pensions Board, because given the nature of the subject that we're discussing here, the actual training that we do and how we approach this is going to be really important. And perhaps if officers and the chair could take that away and think about it.
James?
I think, well, I agree. It is exactly the same subject matter. We've agreed, we've arranged for our head of EDI at the council to actually provide a training session to Pensions Board at the next Pensions Board. But it was only because of diary clashes and the Pensions Committee doing quite a lot on sort of the property side at the moment, so we didn't want to overload the committee. So we haven't aligned both sessions at the same time. So we were going to do Pensions Committee a bit later after we've got through this the big property piece of work that we're going to have to do in the next few months. So it's a good idea, but I think practically in terms of diary management for committee members, we were going to do 2 sessions. But you're getting a session in November, Roger, so...
That's fine. Actually, it's one of the areas I think we are vulnerable on, because they've been around. It's one of the areas I think we are a little bit vulnerable on, because the guidance came out in March 2023, and I think we need to be showing that we are making progress. So the fact you've got something teed up for November this year, excellent.
Also, as well, Tundi is developing an EDI policy with our head of EDI at the council as well, to make sure that we're that's one of the gaps in the general code of practice. One of the gaps is we don't have that policy, so Tundi's working on that with our head of EDI as well.
Yeah. One last advert. There's the Tri-Borough training next Monday, and that looks a very interesting agenda, which I think both Pensions Board and Committee are able to access.
Thank you. Question, Tony?
No. I'm down for that Monday. But I know it says 1 hour. It's 3 hours.
Yeah. It's about 3 hours.
It's 3 hours.
Yeah. Oh, yes, I'm down for that on Monday as well.
Yeah, but on the thing it says 1 hour on here.
But they've allocated 3, I think, to us.
3 hours.
3 hours.
Oh, yeah.
You can just...
3 hours training.
Right.
So initially I thought it was 3 hours, Councillor Bowles. I thought it was 1 hour as well initially, but when I've had the invite through, it's actually blocked 3 hours out of the diary. Roger, did you want to add anything?
To say, my understanding is it's all like Tony's. My understanding is it's all morning. It is. In fact, it's a very long morning as well. It's not a short morning.
Right, okay, so for our YouTube members, that brings the part 1 of our meeting to a close. Thank you for those that were observing us today, and we will take part 2 shortly. Oh, sorry, Sylvia, did you have a question?
Can I just add something about your training? I was very pleased to see that you classify our sessions at London CIV as part of your training, and I would like to highlight that this Tuesday, 2nd of October, at 4 p.m. there's going to be a 1 hour done via Teams. It's a webinar, and it's what we call a Meet the Manager event. We did send these invites to all of you. Comes from the events at London CIV. What I think is very relevant for you is because it's our Senior Equity Portfolio Manager, Yanis Vairamis, who came here in December 2023 when you decided to invest with us on your global equity value. He's going to be interviewing the portfolio manager of our global equity value fund, and he's also going to be interviewing a climate analyst who does all the climate analytics of this particular fund, and they're going to talk about how they introduce ESG, how they integrate that in their strategy, and also what is the framework to decarbonize the strategy over time. So I think it will be very interesting, topical, and it's going to be catered really for the councillors to hear and ask questions. So it's going to be recorded as well. So if you can't make it, it's going to be made available in our client portal, and we'll be able to give you access to that. But given that you are planning to invest in that fund, it'll be very interesting. We also have an update that there is another partner fund in London who has agreed to invest in that fund as well. And we are waiting for a third decision in mid-October. And after this third decision, we're going to start to make plans to launch the fund. So Tandy and James will hear very soon from us on target dates to launch the fund.
Thank you, Sylvia. Councillors, have you received an invite for the meeting on Tuesday? Yep. Oh, lovely. And Tandy and James, either one of you be attending it as well? Yep, lovely, wonderful. Thank you. Right, okay. Thank you very much for watching on YouTube, and we've closed part 1 of the meeting.